Markets might be sluggish or bearish, but two sectors to focus on during interest rate cuts: realty sector and financial services. Indian markets are under pressure from global sentiments and Nifty struggles to cross the 25,000 mark. But sectors like realty, banking and financial services, capital market stocks, auto are showing their strength, anticipating the rate cuts by RBI on 6th June. If you are conservative investor, you can look for recent development in these two stocks. One is LIC, Life Insurance Corporation. The company reported an EPS growth rate of 38% year on year in quarter 4 FY 2025, but a low revenue growth rate. However, the EPS growth rate from the past two quarters has been more than 20% and significantly improvement in the operating profit margin. Valuation front, the PEG ratio is at 0.7, which is below 1, indicating a relatively lower value. Technical charts showing strong recovery from the recent lows with gain in volumes and bullish patterns on both daily and weekly chart. Second stock, Bank of India. Share prices formed an interesting chart pattern with raising volumes on both daily and weekly chart. The Bank of India declared good quarterly results over the past 3 quarters with an EPS growth rate above 20%. But here is the catch. Most of its revenue comes from other income like commissions instead of financing margin. However, the company reports high net cash flows and the price to book value, which is the key metric to value the bank, is at 0.8, which is relatively lower valuation. In case if you are a risk taker and aiming for moderate to higher gains, we also observe the similar patterns on chart and fundamentals in stocks like Engineers India and Deepak Fertilizers. Indian markets might be sluggish to bearish, but investors can look for specific sectors where the value and growth are driven.